All right. Welcome, everybody. This is Eric here. You know me as eRoo. I've got Max online as well. You know him as Trades and Gains slash Unusual Markets. Um, just so you guys are aware, I've got my son here with me today too. So if you hear any baby babble, that's him on the side over here. But we're going to go over not only the earnings predictions and analysis that we've already made, but we're going to jump into what's coming up for Wednesday. So on Saturday or Sunday, we did a live stream and went over just about everything for Monday and Tuesday in terms of the bigger names. We do have some predictions for closing as of today for Tuesday. We do have some positions in EQT and ENPH end phase, so keep an eye out for those. We will, move over and check out those when we do close up and see, what ends up happening with those positions. Just a reminder, you guys, anytime you're dealing with earnings, just because you have an earnings beat doesn't necessarily mean it's going to go up. Just because you have an earnings miss does not necessarily mean things are going to go down. We had a couple of examples of that as well, where the forward guidance is mostly what people are looking for, mostly what analysts care about. How the company is faring to do in the upcoming quarters, upcoming years, is always going to be added into their reports, and that's generally what people are looking to base upon what direction that price is going to go. For those of you that are joining us, please, I know I've got 7 people watching already. Make sure you go ahead and comment stacks in our comment box, just so we know you're watching, just so we know who's here. And as always, if you do have any questions, don't hesitate to drop them down in there for us. Don't hesitate to give us any additional tickers you want us to go through. Usually we do stream for about an hour to an hour and a half, sometimes a little bit longer. We did start a little bit early today, so expect this one to be fairly extensive, but that's what we want to do. We want to make sure that for earnings, you guys know what's going on and that you guys have an idea of what to expect. But as always, be careful with your risk management. We're going to give you the data, give you the hard data that we have, let you guys know what the expectations are going to be, and try to keep it entertaining as well for you guys as we go on. Max, let's go over what we had in terms of previous earnings calls that we had for earlier in the week. I did post a couple of them into my channel, so we'll discuss them real quick. We had GM, Northrop Grumman, Coca-Cola, and LMT. I just want to make sure that people that see, especially if you guys are in our Discord, and as well with Stacks, you do now have the opportunity to check out my channel in Stacks as well. But I've been posting the earnings as well as some charts, and we just want to make sure you guys understand what's going on for that. Yes, Mara. I did notice that one position for Mara, it's been struggling because Bitcoin and because of the crypto kind of dropped a little bit. If you are in that, I did mention it was a high risk position as long as crypto continues to go up. But if you are in that position, I would definitely consider getting out if you are looking at severe losses. If you're looking at 50 to 60% drawdown, keep in mind you need 100% to bring it back up to even. But again, those are situations where especially if I do tell you high risk, please be careful. Size a little bit smaller in those situations so that you don't end up in a bad position. Let me switch over to this real quick. We've got our...
Do we want to kick off with Verizon? That was kind of like the first big one we talked about. I got that pulled up right here too, so I can go over kind of like results, their positive points, all that kind of stuff as well.
Yeah, Verizon. Go ahead. Tell me what you got about for Verizon.
So it looks like our wireless service revenue, which is one of their biggest drivers, 20.9 billion, which is up 2.2% year over year. Free cash flow, they were looking at 5.2 billion for the quarter, 8.8 billion year to date, up over 300 million compared to the first half of 2024. All positive signs, especially in, again, a consumer-based business and a very, let's call it a weak consumer economy currently. They reported market-leading wireless service revenue. Again, the market achieved an adjusted EBITDA of 12.8 billion, marking a 4.1% year-over-year increase. Um, some negative points here were postpaid phone churn remained elevated this quarter, reflecting the lingering effects of pricing actions and ongoing pressure from federal government accounts. The wireless market remains competitive, impacting Verizon's strategic and segmented approach. Consumer postpaid phone net losses totaled 51,000 for the second quarter. Verizon Business delivered 42,000 phone net adds in the second quarter, and the company continues to face elevated competitor promotional activity affecting consumer postpaid phone churn. So, a big thing that you need to understand with consumer anything right now is when we get those like Michigan consumer numbers, we get numbers about PCE or CPI or anything like that. These are all things you want to pay attention to. Quite frankly, if you looked at any of our PCE or CPI reports leading into this earnings, it would give you a good idea of how these reports will most likely go, especially in things that are driven by the economy and consumers versus things that are driven by other companies, potentially, such as a Dell or NVIDIA. Verizon, anything that's really consumer driven right now, it is a huge risk at the end of the day. Now, if we go ahead and I think what we want to pull up their chart next to see what that reaction was. So on that reaction, I remember looking the next day, we were up about, I want to say 2%. It was trading at around $42 a share, up from 39, I
Went up,
believe.
looks up like it went up about 4%. I had a resistance level at 42.85. Looks like it bounced straight off of it, right off of it. And during that was in the pre-market trading, and then kind of went back up, and it's kind of peaked up above that, but staying below that resistance level I drew. So that blue line, anytime you see these blue lines that I've drawn in my trading view, those are the expected levels in which we should go visit. Very likely points of support and resistance. I'm always going to draw the ones above and the ones below, so we have an idea of what direction, what those areas may very potentially be. Now, keep in mind, support and resistance tends to be areas of it. So it's nice when the ones I draw are exactly where we bounce off of, but sometimes we may peak above or below, right below it. So remember, it's an area of volume, and you can always use this VRVP, the volume profile, on a larger scale time frame to get an idea of where all the buyers and sellers sit, and look for those volume spikes on the side that give you an idea of where those positions may potentially be. Go
I
ahead,
was
Max.
gonna say one thing I like about this chart though is so a lot of times with earnings plays, what we'll see are aggressive run-ups or aggressive sell-offs, and then run-ups back to previous formed like supply and demand levels over the last like week or month or whatever the case is. And the cool thing with Verizon that we're seeing right now is we see that jump post earnings to 42, let's just say like 42.90, keep it simple, right? Um, we saw a dip back below, but again, we see that run up yesterday to 43.07 around there. And then that maintained and it's been holding strong around that 42.30 level, which like in my head, when it comes to something volatile and that's like a little bit uncertain, that's a great sign in terms of the conviction that the buyers actually have because they're not expecting downside pressure and they don't have a bunch of sell orders put up at these like 30 to 40 cent increments because that's what we're seeing Verizon move as. Like today, it's up a 0.5% and it only moved 23 cents, right? So that's one of those things where it's like with a ticker like this, we may see some aggressive algo manipulation at a 30, 40 cent like delta in terms of their buy and sell targets and order targets. So in my mind, this is like a great sign of things to come for Verizon because this post earnings pop is showing that it can hold the $42 level, which is significant because it was at 40 heading into earnings. So it's showing that it has that like upward momentum and maybe some things cooking in the background from that earnings call and from that kind of like post conference call in a sense that gave people a little more conviction and maybe a little more confidence heading into the future with Verizon and their promotional and customer retention efforts that they may have coming up in the future. So that's just one thing I like to say about earnings is like it's always cool to play the pop and stuff, but the reason why is because we usually see aggressive prices back to previous levels of demand and supply zones, or we see that pop and recovery back to where that gap was initially created, right? Over and that might be over a week, over a month, whatever the case might be. So these are the kinds of plays. And again, I think in Chemo's post, the thing he highlighted was the fact that this is an amazing dividend play. They always pay out amazing dividends. So you're not going to see a lot of people sell out heavy on this position because they're going to have those dividends that they're getting paid out on a monthly basis right now. So it would take a very, very, very poor earnings report and very, very poor outlook to make this stock lose something like a Lululemon type move, or I'll even say I'm calling it right now, or a Chipotle type move that we're going to see when they report earnings. Because that's an example of not only do we have poor consumer sentiment in the US economy, but Chipotle as a brand identity, as social sentiment, anything that you look up about Chipotle and customers right now, there's no such thing as a positive review. It's pretty much the crumble cookies of Mexican food right now. So it's one of those things where this is a very great sign with Verizon. I think we nailed this personally, this call out in terms of it not having a crazy move, but it also being able to hold strong with whatever direction it was going to head in.
Yeah, I agree. If you take a look at my chart right here, two things I want to point out. I already mentioned it last time. Price PE ratio 9.5 is a great value buy for Verizon at this point with that dividend. In terms of what did just happen with earnings, you saw a big sell-off before earnings, but obviously a pop from that. So sometimes I do like to see, if I'm expecting up to the upside, having it go down and sell off before earnings sometimes is a good sign. Just because you can think about it, put it yourself into big money shoes. You're going to get Verizon at a much cheaper value and be able to run that, take that pop up toward the top. The other side of it as well is the fact that as of right now, we have this kind of a, big wedge slash, you could call it a flag too if you want, those generally have, especially right now because we've popped to the upside as well. We're back at that trend line. We got to see it. This could just be a pop up above and come back down. But if we do start to reject that, start to retest that trend line, head back up toward the top side, that could be a great sign for Verizon that we could see above 40 and eventually above 45 in due time. So very good earnings in terms of Verizon. I would say Max and I hit the nail on the head in terms of it. Stacks was a little bit back and forth. There was both a put and both a call, but Chemo also posted it. If you guys got my Beehive email or newsletter that we sent out, we discussed and put in there about what Chemo had to say, showing that they were actually slowly accumulating over time with Verizon and still buying into that name. So they definitely see the value in that position.
And one thing about accumulation, if you're ever curious about, like, let's say you go back and look at a week, right, of options activity, and you're like, hey, like, what have people been doing with Verizon for the last week? And you see like 2 prints, right? And you're like, well, that seems a little suspicious. Okay, well, take your range, set it out another week. Okay, take your range, set it out another week. It's the same thing as reading options activities, very similar to reading a chart. Like, let's say I'm looking for a short intraday move. I'm going to look at anything between the 1 minute and the 5 minute chart. The 1 minute chart for entries, and I'm going to look at the 5 minute chart for kind of like momentum going through the day, right? Same thing with options flow. If I'm looking at options flow and I'm going, hey, what were people doing pre-earnings? Well, if I see that nothing really happened for 2 weeks, but then I go back 3 weeks and someone dropped, let's say, $500,000 on Verizon calls, in my mind, if I go, okay, nothing's happened for 2 weeks, and now I see 500K in week 3, then in my head I go, okay, this is where they planted their flag in the sand to say, this is our position for options. Because then once you see that print, you go, okay, when is the expiration date? Is this a post-earnings play? Is this a pre-earnings run-up? That's when you can kind of start to look into those deeper dives and deeper analysis and start to critically think about. And I think Eric posted an amazing message in the Discord earlier today about why are you taking the trade? What is your thesis? And I think that's one thing we try to get across to you guys, whether that's through the current state of affairs with that industry, whether that's like what is going on in terms of that sector. Those are all things you need to take into account, because if you can't sit there and go, well, I'm taking Southwest airline calls for earnings because I believe that they're, for example, the fact that they're taking away free seating and they're going to have more organized seats, which will get people onto the plane faster, and like airline travels down, so it's enticing people to maybe take more trips, so their forecast could be up for the next year. Those are all things that I'm going to kind of look into in terms of like what is going to move my bias or what's going to move my thesis, because then you have a core thing that you're looking for. If you don't have a core thing that you're looking for when you're options hunting, then you're, whether you have the software or you don't have the software, you're trading blind at that point, because then you don't have a sell-off point. You don't have a, I like to call it an oh poop filter. We'll use the edited version for YouTube,
Yeah.
but like that's, you don't have those kind of like, oh, I should probably get out at this point, or I should probably average down at this point because this is something like, for example, I'm in snap calls for $13. Those didn't move for a month, but I believed that Snap is going to have a huge ad revenue pop heading into 2026. Those are up 108% today. And I have until June 20th of 2026 next year on them.
Yeah.
So those are just examples of things that like I want you guys to really take the time to understand. Like, I saw a stacks print, I went and looked at a chart. Here's what I think could happen. Let me go look at some news. Let me go see what people on Twitter are saying. Let me go see some other analysts that I might follow outside of Investor Central Club and on Twitter, such as Printing Tendies, Milky Filky, Zach Morris. Like, there's tons of people within our community that work with us that don't really work with us, if that makes sense. Meaning, we all kind of share the same viewpoint and opinion in terms of we want to give you guys the information, but at the end of the day, it's up to you to synthesize that and have it fit whatever thesis and or trading style that you're comfortable with or maybe dealing with in this moment. So that's just like one thing I really want to reiterate to all of you. That's why I've been doing the streams as often as I have been. It's just to give you insight on like, there, like, you guys know, we sit on there and sometimes just listen to music for 3 hours before anything interesting even comes on to stacks, or before we see any type of level that's confirmation. We've had full streams where we haven't taken a single trade and we just hung out all day and watched the Jeff Teague 520 podcast and talked about that WNBA. Like, so it's really about like understanding and taking control of everything. Now, we have some more requests down. We have hymns from Daniel is the next thing that I think we want to talk about. I'm not sure if hymns has earnings this week, Eric. Do you know if they do?
I don't think so. I was actually saying we've got time after close to go over a lot of these ones from before. I wanted to make sure that we get our viewers some information on stuff that's going to show up tomorrow, so they have at least tomorrow to prepare, versus it just being tomorrow's closing bell and getting into it right then and there. I know we've got the big ones for tomorrow are going to be Google and Tesla. I know those are going to be very, very popular names. Let's start off with Tesla first off. Obviously, very volatile name. I've got the chart up already over here, and what you can imagine here is it's kind of got that wedge pattern as well. It's hard to tell if it's going to reject off that top upper trend line or not, or if we're going to see it break through. Tends, hard to tell with the PE ratio. PE ratio is super high, 181. We definitely know that over the course of the last, few months, especially with the, tariffs and everything, especially with Elon and his public breakup with Donald Trump, there are a lot of, I would consider those to be headwinds for Tesla when it comes to it. So Go ahead, Max. Give me your analysis on the numbers, though.
Okay, perfect. And I was going to say, Eric, some of these numbers, when you're hearing them, I want you to think based on what you're seeing with the chart, do you think some of this has already been priced in? So just keep this in mind while we're going through this, because EPS, we're expecting 40 cents, expected 33% down year over year. Talk about a kick in the balls. Revenue, we're expecting 22.4 billion, which is down 12% year over year. Deliveries are down 13.5%. That is the worst ever that we're going into an earnings report with Tesla in terms of expectations from the street. Regular credit revenue is under pressure. Our earnings ESP is just negative. I didn't even get a number for it. And Zach's ranking is giving it a number 3, which is a hold, aka they have no idea. And if we look at the options flow, NVIDIA, Tesla, it has pretty much been a casino. We have about 1 million to 500K that separates it each time. Tesla is basically shrinking like your crypto portfolio in 2022 is the consensus with their EPS estimates. Now, what's going to be moving the needle and what investors are paying attention to? Couple things. Robotaxis, number 1. They're testing robotaxis in Austin right now. Musk says it's a multi-trillion-dollar market. Analysts say, can we get an actual car that works first, though? Expect the call to be 70% robotaxi, 20% AI, and 10% actual results. If it's one thing Elon Musk can deflect and do best is distract people from actual results and get them hyped on hopium. We have the XAI tie-in, Elon's other baby, XAI. That might get some love, so watch out for that. If he says AGI 5 times, the stock's going to jump 10%. We also have the Model Y launch out in China. This is Tesla's answer to the minivan, because I don't know if you guys know this, but a big thing in China with BYD is they create these like minivan-esque type luxury cars that have been doing really well, and they're cheap as hell. So that's the other big point for them. Bigger, more seats, more in Tesla's designed to compete in China, where BYD is eating Tesla's lunch, dinner, and midnight snack without any type of heads up. Now, one thing to keep in note and some red flags, margins are a mess with them right now. They used to be an industry best. Now they're not so much. Tesla's cutting prices to compete, and it's working, but it's working against themselves when it's all said and done. What's worse, those regulatory credits that kept them afloat, they're currently on life support as well. We also have Energy and Optimus Robot. There's more sizzle than steak, though, here. Tesla's energy biz is down quarter over quarter. Optimus still isn't making lattes or folding my laundry, but that won't stop Elon from calling it a trillion-dollar opportunity. So maybe let's have a drinking game tomorrow where we take a shot every time Elon says trillion-dollar opportunity on the conference call. So it looks like tomorrow, really, let's talk about the bear case, because I think that's what everybody's interested in, and we all kind of have an idea of what the bulls are looking at. Every metric is worse year over year with Tesla right now. Musk is more focused on politics than production. Valuation still assumes a 50% CAGR forever, by the way. Regulatory credits are drying up, which equals a real revenue risk for them. And China and EV competition is a brutal battlefield that they still have not been able to fight through. So those are going to be the main things we're looking out for Tesla tomorrow. Again, we don't know how much of this has actually been priced in yet with that price activity we've seen over Tesla within the last week.
Yeah, I've actually had this chart drawn out for a little bit. Part of me has this feeling that we're going to see Tesla go through a full distribution phase. This is Wyckoff. I do have previous Wyckoff videos you guys can go ahead and take a look at as well. But it really does feel like, okay, we've seen the left side, the preliminary supply. We saw the buying climax and an automatic reaction. But we've seen quite a bit of these signs of weakness, especially as we dip lower. Right now, we had a up thrust after distribution. And then now we're seeing, I believe, a last point of supply. So for me, yes, we could still see this break up above that little wedge I had drawn. But I would not be surprised to see Tesla coming back down toward that 220 range in due time. You know, the issue with options has always come down to, you know, figuring out the time frame. But with all these headwinds that we keep seeing, you know, Tesla has been a big name, but a lot of times the bigger they come, the harder they fall. and we're very potentially seeing a last point of supply before we drop down lower and potentially head back down a bit further. Another sign of it is the fact that these PE ratios, 181, is extremely high, and I would really think, unless Tesla has the moat that, for example, Nvidia has, Tesla has lost a lot of its market share to competitors at this point, and especially with the other headwinds such as the EV credits being cut, etc. What is it that's really going to keep this name afloat? Aside from the AI, there's been talks about how Tesla isn't just a car company, they're a tech company and an information company. One of the things that they do have is the fact that every car that drives down every road is taking a high resolution video and photos of the road, and eventually they can create some sort of virtual reality with all of that information and update with updated video of what's going on in terms of the roads and in terms of the world outside. But a lot of times you can also understand, and I'm sure everybody understands this, Elon tends to overpromise and underdeliver, where in business you tend to want to do the other way around. You want to underdeliver and underpromise and overdeliver. Yeah, mixed up my words there. But it seems as if there's a chance that we could see Tesla headed down in the wrong direction. The thing that I don't necessarily love, especially because we do have earnings coming up, is that when you take a look at these names, especially something like Tesla, I'll show you right away, right here, with our implied volatility for the calls, we're already at 99 to 100%. So that just means, that's the calls. If I go look at the puts, same idea. But even if you're looking a little bit further out, look at the August 15th, which is the next monthly expiration. We are right around the in the money strikes, you can imagine, still around 50 to 60%, and all the further in the money you can see still is hitting over 100%. So the idea here is that the risk, I don't know if the juice is worth the squeeze on something like Tesla. If you do hit the right direction, obviously you'll make some solid money. You'll very likely see about 100% in terms of that return. But this is something I would probably say wait for the report and then take a position if you really would like to. All right. I like that analysis. I think that's a solid take on what's going on with Tesla.
I think it's
one.
just
Go ahead.
It's just it's a matter of a distracted CEO that keeps kind of changing the narrative each quarter to fit whatever the investors want to hear for the quarter. Mm-hmm. It's very much how people are saying they voted for Donald Trump because he was running on all these policies, and now when we look at his tenure so far, he's not only fallen back off of those policies, but he's also completely almost abandoned them because A, his camp didn't like him, or it was just things he realized he couldn't execute on. Really, this is the same thing with Tesla. Their earnings report, if you catch it in the right direction, yeah, you might make 500%, but that post-pop is where you're going to want to make that money and see where is anything happening in the dark pools. Is anything happening with golden sweeps? You want to stay away from unusual options with this kind of stuff, just because usually those unusuals are going to be aggressive hedges against open positions that they have that you could easily correlate to the dark pool in terms of the timing of when that unusual hit and when that dark pool purchase occurred as well. So just another thing to keep aware of when it comes to options earnings trading, more so. Is keeping track of those dark pools, because that was another thing Kivo highlighted in the Verizon thing. We saw a bearish flow going into Verizon, but if you looked at the dark pools, you saw steady and stealth accumulation happening over the last quarter in those dark pools. Same thing it could be the same situation with Tesla. Yep. That's where looking at the dark pools a month out and then kind of organizing those by premium or money spent, essentially, that'll give you real insight into, okay, where were institutions bullish and where did they start to back off a little more aggressively. Because remember, the goal of the dark pool is they can make moves and accumulate shares quietly without disturbing the chart and or the markets or options flow.
Got three little things I want to point out. So I'm just filtering for Tesla for the buys and for big money, just because with something this big, these are the one, you know, they're not spending just a couple $100,000 on it. They're spending millions and millions. Three things that stick out. Number one, on 7/7, we have $1.8 billion being spent on Tesla at the close. Same with on the second, 1.46 billion, and then on the at the end of last month, 1.18 billion. So definitely there's money flowing into Tesla. But it is a situation where, again, maybe they'll see some sort of earnings beat. Maybe price is going to shoot up, and then you might see a lot of these names start, or numbers, and equity position holders start to maybe get out of those positions. But we will have to see. A lot of it will also come down to what the general sentiment and news around Tesla ends up being over the course of the next few months, if we'll see that full distribution. We did see the thing about these in big money is that a lot of them, not too many of them, are extremely short term. I see some puts over here for the 8th of next month, and then a lot of these are 2026. So the 15th of this month as well, that one, 36 mil, that might be an earnings play getting in on the 17th. So again, a little bit of a mixed signal in terms of what Stacks is showing us, especially with these bigger names. There are people playing both sides. So, you know, I would say with what Max had to say in terms of the chart at least, and in terms of what analysis we have, it's very possible that we've already seen the bit of a run up in terms of, you know, think of it this way, from July 7th, we saw that run up already, and this has already moved from that lower end, has already moved about 15%. So I would say the risk really here is to the downside, especially if it respects this wedge pattern that I've drawn. We might see it pop up a little bit, hit that, and then come back down, and I think that's kind of where this might very likely be headed.
Yeah, and like today, I mean, we're seeing 9 million, we're seeing 14 million in overall flow, with 9 million going into calls against 5 million in puts. But if we look at our most hit contract on Tesla for today, it looks like it is those 330, I want to say 330 calls. No, yeah, 330 calls due for 725. 390, 390, 240, 250. These are all auto executes. So the idea here is these were executed based on price levels that these people had already drawn out. But we can also see the steady progression. They opened up a position at 10 a.m. With a 950 average. And at 2:34, that was the last order we saw, and they're already at a 1475 average. So they've already moved about $500 within a premium. Again, this could be a situation where we see a nice pre-earnings type run up, which then ultimately leads to an aggressive sell-off. We've seen similar patterns with Lululemon. Honestly, you're going to see similar patterns like this with Nvidia, Tesla, anything that is landing consistently in the top 5 of our flow scanner in terms of a retail name, not talking about SPY or IWM or QQQ. You're typically going to see that post earnings or pre-earnings run up, or pre-earnings sell off into a run up. So it's really about, you need to, and I hate to say this, but you have to sit and stare at the chart and the flow. If you're going to plan on playing earnings, that is the only way to play it, and keep your money safe, unless you're willing to gamble whatever money you're putting into your earnings play, zero or hero. Those are really your two options. Luckily, you have me here doing earnings analysis, so we can sit and hang out from market open to market close, where we just watch earnings tickers. But yeah, I love everything Eric just said. But again, this is a situation where I would go and look at Tesla, see what the most bought thing is, and then look at how that contract has progressed throughout the day, especially right now when we have 22 minutes until market closes.
Yep, completely agreed. Just something right there. We just saw Wolf call buy for $7 strike. So
Let's
that's good
go,
to see.
baby.
Okay.
Let's go.
Um, Next one. Let's go over Google real quick. Google, let's see. We do have Max's right up on the Discord. Keep in mind, if you
Yep.
guys haven't already, his Substack is in the description box below. Give it a sign. You guys can get the free stuff at least, and you'll get a chunk of what he's doing right here. It's a lot of emails. I love it because you get a lot of information on what to expect in these earnings plays. And right now, like I think Max just mentioned to me before we started stream, he's already done 15 of these earnings plays for you guys. And it's important for you guys to understand that this is all designed to help you guys. We want you guys to profit. We want you guys to make money. We're on the same side here to help you guys out. So please go ahead and sign up for his Substack down below. And as also give us a thumbs up, give us the like, and make sure that you hit that subscribe button and the notification bell. So when we do these throughout the rest of this month, you guys can also join us for these live streams.
By the way, I'm feeling generous. So if you guys join these live streams and you just leave your email in the chat, or if you're in the Investor Central Club Discord, feel free to leave your email, because what I'll do is anyone who's in here and just wants to see the stuff, I give you guys a good amount in the freemium preview. But if you really don't want to pay that monthly and you're a part of the community and you're showing up daily, I will go ahead and give you a lifetime comp for these articles. So don't worry about having to pay for them. I will make sure you guys are taken care of at the end of the day, so you have as much information as possible to feel as confident as possible heading into these earnings reports, because I do put a lot of information in here in terms of their snapshot, what to expect, and really what are going to be the catalysts. It's not I will warn you, these aren't so much options oriented. They're more news and what is the street looking at in terms of like what are the catalysts, because we could look at options plays, but when it comes to earnings, the big thing is future outlook and what do they have cooking on the back burner, because in today's age with technology especially, people don't care about what you've done, they care about what are you doing next to stay ahead of your competition. So I can go ahead and kick things off with our Google Q2 snapshot here. For EPS, we're expecting $2.17, which is a 14.8% gain year over year. Revenue, we're expecting $93.86 billion, which is expected at a plus 11% year over year gain. Search plus ads. One thing to know about Google, y'all, search and ads, it is a huge sector of their business. But good news there from the street. We're expecting 52.8 billion estimated on a 9% gain as well. On the cloud side of things, another big sector for them, 13.1 billion, up 26% year over year, which isn't shocking with VO3 and other cloud-based tools that they've released over the last year. Year to date, the stock is down 2%, while Nvidia and Meta are absolutely ripping. Now, what are the things that are driving Google's deal? AI is disrupting. While most companies wish they had Google's AI firepower, Alphabet has a weird problem. Its own AI is threatening the business model. So it's Google's own AI is essentially threatening its own AI business model. Meanwhile, competitors like OpenAI plus Microsoft and Anthropic plus Amazon are tightening the moat. Search isn't dead, but it's definitely evolving fast. We have the antitrust ruling with Google looming large here as well. The DOJ wants Google to sell off Chrome after being found guilty of illegally maintaining a search monopoly as well. Cloud versus CapEx, who's going to win here? Google Cloud is a beast. It's expected to grow 26% year over year, as we mentioned, but it's also costing a fortune for them to get that 26% gain. So it's like, what's going to run out faster? The gains from cloud or the money it costs to maintain and run that cloud infrastructure environment? Data center capex is projected at 75 plus billion in 2026. AI training plus interference equals the margin pressure for them, and their power grid strain plus regulatory scrutiny is going to equal some new hurdles for Google in the future, especially when quantum computers become the new norm. The macros and ads under the hood here, if Google ads slow down, it's a canary for consumer demand. That's why this report matters for more than just tech. Ecom ad spend is a signal for retail demand. YouTube is content consumption gauge, and the S&P ad budget's small biz health barometer, because most small businesses are using Google to get their ads out there. So if that takes a dip, it's showing that small businesses, A, don't have the capital to continue to invest in their marketing efforts, and B, that the small biz sector is having a slowdown in this case. Add in Trump's tariffs, global slowdown risks, and Shein and Temu ad declines, and ad trends could flash warnings just beyond Google. Now, our bear case here, AI overviews. That means that there's not going to be as many ad clicks. So you have to think Google's AI is amazing, right? Everybody loves Gemini. But guess where Google makes the bulk of their money? People clicking on ads. If we have AI and we have Gemini who's able to circumvent us having to look at ads and just get straight answers, they're going to get a kick in the balls for that. Chrome disinvestment risk is an existential threat. Chrome is a big part of their business that I don't think people realize. And if the EU, which by the way, the EU bullied Apple into using RCS messaging because iMessages, unfortunately, that's 10-year-old technology. Then we also have rising infra capex. Again, we just covered that. We're there. Google's battling right now, cloud infrastructure. And then the one thing people don't realize is the amount of money it costs in terms of servers and what that infrastructure costs to run each year versus what your customers are paying to offset those costs to make you profitable. And then the year-to-date underperformance, that's negative momentum. Now, granted, we haven't seen any big firms come out and downgrade Google at this point, so that's a good sign, because if we would have seen it today. We saw 4 analysts maintain or upgrade their stance on Microsoft. Typically, when that happens, we would also see downgrades on Google, Meta, and the other big players as well. When we see stuff like that, we're going to see a lot with Microsoft right now, because guess what? Microsoft is trying to keep the crown from NVIDIA of most valuable company. But again, those are things that you just want to always look at, is make sure that, like, hey, are all these factors into my options play adding up? And that's how we're going to look at earnings, right, fellas? Because if I think, for example, I gave IBM a target of $300 a share by the end of this year, and that was based off of quantum computing, and we've seen how that's produced. So if you're going to go into Google earnings, have a price target in mind, and then think, when do I think that price target could happen, and what are going to be the catalysts of that price target? With Google, we could give it a price target and say, hey, it'll be 200 by the end of the year, and it's going to be mainly because of ads plus their AI initiatives, where they'll figure out how to stop essentially punching themselves. Because it's like when you were getting bullied as a kid and they're like, why are you hitting yourself? You're like, because you're making my fist hit myself. That's why. Well, think of you hitting yourself as Google being like, look at our great AI bot. And then they go, yeah, but like, a lot of your business is based on people clicking links and businesses spending money to people to click links. So those are the things we need to look at, going from what do investors care about here? Now I'm going to switch it over to Eric so he can give you guys the nitty gritty of the chart details, because that is not my expertise, unfortunately.
Yeah, if you guys are in the chat, let me know. When you guys do your AI search, or when you guys search anything on Google, are you still clicking on links? Because I'll tell you this, a lot of times I'm just going to use what the Google AI bot tells me, and that's basically what I use. Like, I'm not going through and necessarily clicking anything afterwards anymore. And I think that definitely, like Max said, is in the end going to hurt them. Even though they do have one of the better AIs out there, it is something that we need to keep in mind for this upcoming earnings. The thing about what we have here with two things, let's start off with Stacks. Stacks, most recently, if you take a look over at just today even, the majority of the buys all happen to be for calls. A few of them are shorter term, but the majority of them are aiming for September 19th. The 210 and 190, that one's already in the money if you consider that. The shorter term one, 815, this one for 215 That's about, let's see, about a 12% expected move. So could I see Google jumping up about 10% after their earnings? Very, very possible. They got to make sure that they give out good forward guidance in this situation. But we don't see too many puts being taken, at least over the course of the last week. On the right end over here with our equity, millions of dollars being spent, but just like you can understand, like we saw for Tesla, I don't see any B's next to any of these. So we don't see any billions of dollars being spent for Google. Oh, hold on. I do have one all the way down here.
And I will say, Eric, we do have a stacks. So I am still in our stacks AI call
Mm-hmm.
from the Google 200s that were
Uh-huh.
called out on 425.
Oh, wow.
Uh,
Okay.
those are currently up 170%. And mind you, you had multiple opportunities to average down. There were multiple times where these contracts came in at about, I think they were around like $1.65 at one point when Google was going through that drawback. But if I look at the last week, our last week, this week alone, our lowest point was $5.15 per contract. And over the last month, our lowest point, again, that was 243 per contract. So you could have easily averaged down on the 3 month. If you would have got in on the 3 month on a 3 month view, May 9th, these were about $1.79, and currently they're at $8.55. So that's around a 700% return if you were able to average down, or you just kind of held it out, thugged it out, and hung out for a little bit. But those are currently up 171%. And again, if you guys read Eric's posts about some of the returns we see on these stacks prints, I'll use Baba as an example. If you would have bought these calls in like January, I think they were about $1.35 per contract. And if you would have sold them in June, they were trading around $34. So you would have turned 135 bucks into 3.4K by just kind of sitting on your hands for 4 months and just playing playing the game of ignorance is bliss, because unfortunately, sometimes in the options market, ignorance is bliss. If you're just like, I'm going to buy this and I hope for the best, sometimes those are where your biggest bangers come out. But again, it comes down to having that like conviction of this is why I'm taking the trade in the first place, though. Because if you do that and you use our software, like that's why I have so many big gain contracts in my account, because I have a thesis, but I'm also understanding that I might get kicked in the teeth and be down 40% for a month before I see the move I want to see. So that's just one thing to keep in mind. Uncle Max giving some fatherly advice here. Um, I'm the OG parent out of the two of us, weirdly enough. So yeah, that's the big thing is you guys, if you give it time, 9 times out of 10, if you have a thesis and you have a thought and you have conviction behind what you're buying, it will play out in the direction that you think it will. It may just not be the prettiest path to get there. So patience, and I'm saying that with a PAY, patience always pays. And that is one thing I want you guys to really understand, especially with our stacks prints, because look at Oscar, look at Texas Instruments. I have a whole list that I could write an article on of like just random tickers that have just exploded and have done the moves that people would want to see from an options flow software, most importantly. Um, we also have some other big names reporting, by the way. We have AT&T, we have IBM, we have ServiceNow, we have Chipotle, we have Thermo Fisher, QuantumScape, Alaska Airlines. Again, guys, this is a huge, not only consumer sentiment check, but it's also a huge check on tech and what is going on and where are those expectations going to lie. Because at the end of the day, we can understand, we can give you guys all the data, but if we don't understand what the narrative is, what the expectations are of the street and of the big boys, then we're going to be trading just as blindly as you potentially. And that's why I might go into these little TED Talks here and there, but I promise you, if you take 5% away of anything that I tell you, it will help you in your trading because and you can ask Eric and anyone on the IC Trades team, I'm a very news-based, action-based trader, whether that be macro data or whatever. And it looks like ASO just exploded on that stacks print, by the way, Eric. We just got a stacks print at 3:48 p.m.
Yeah,
Or
looks
I don't
like
know if
it's
it's
popping. We'll see what if there's any news that comes in, but it's moving a little bit more right now. It kind of popped up, it came back down. We'll see if it goes up further. I want to make sure I go over this just because we just talked about Google. Big picture Google, we had this big gap from the drop in February where it hit all-time highs. If you go and compare this chart to other big tech names, other big Mag 7 names, Google's been one of the laggards. It's been a bit behind the rest of the group. So could we see, at least right now, Stacks shows there's a possibility we might go and start filling this gap, head up toward 200. At least Stacks shows me that there is a great amount of sentiment for it to head up further. The only thing I don't love is that right now we're kind of in this upward channel and we're kind of far up on it. So, if we do see that double beat, we do see them give us better forward guidance for what's about to come in terms of their AI. We very likely can see this go up toward that upper part of that channel, or upper part of that gap. However, if we just see it reject, we start seeing it bounce back down. I would expect it to very likely come back toward, I would say, the 180 range, if anything. So keep in mind, it's one of those things where earnings is always going to be a little bit of a gamble, but in this situation, I would push a little bit more bullish than bearish on it.
100%.
Other names real quick. ServiceNow. Take a look at the bottom. All of those earnings, all positive. We got one miss back over here back in February 2018. But everything's going to be a beat. So I would expect it to beat earnings. Now the question is that already priced in? Well, the positive side of it is the fact that we already saw a little bit of a drawdown, a little bit of sell-off. So, the possibility is that we'll see ServiceNow go to the upside in terms of earnings. If it does end up with some sort of miss or doesn't quite meet those expectations, we do have two pretty ugly looking gaps down below, all the way back down toward about 830 is the lower end. But you can probably expect, right, you can see how there's a big void in terms of the volume over on the volume profile. But if we are able to bounce back up, we would probably see it come back toward about 1,000. That's only about a 4 to 5% move, if anything, to start. There is a gap up above, all the way up toward 1,100 or so. So that's what ServiceNow looks like. Let's see what Stacks has to say about that, though. If I put in now, yeah, we don't see too many prints on this too often, so it's kind of a hard tell when it comes down to what Stacks would analyze. This one would be mostly based upon the technical analysis of that chart. We do have a little bit of buying, 50 mil, 50 mil, 50 mil, 160 mil, 140 mil, but those are pretty small bits and pieces, if anything.
ServiceNow is basically the bellwether for how real AI adoption is inside the Fortune 500, by the way, because most Fortune 500 companies use ServiceNow in either IT, HR, finance, or operations to some pedigree. And their big thing right now is R&D into AI chat agents who were basically executives in suits that don't exist as real people. So it's definitely going to be one of those things where, yeah, we're coming out with all these great AI tools, but what's the adoption rate going to be? ServiceNow is going to be that bellwether test of what does that actually look like for people. So definitely be on the lookout for any AI initiatives with them. But I definitely see them being a heavy beat here, especially if they have adoption going through their Fortune 500 customers and enterprise customers at that, most importantly.
Quick side note, we are in EQT for earnings after the bell. We did just see about 400K for the 815 $60 strike. So that is something to keep an eye out for. very likely that we might see a pop. I already had that analysis drawn out for you guys from earlier, so keep an eye out for that one.
I can't wait for EQT.
I like it. I'm in about 10 contracts for that at this point.
Can't go wrong with it. It's that clean, it's that energy play, baby. And that's where all that money's headed.
Yeah, we'll see that as soon as it closes. Let's get into CMG Chipotle. I know Max has a very bearish take on Chipotle.
Oh,
jeez. That real quick.
Yeah,
I would say, like, for a lot of us, you guys can also understand, use your own analysis of what's actually going on in your life. I'm a big Chipotle lover, especially being a basketball player. It is something that is, you know, a nice, well-rounded meal when it comes down to it. But again, and we've definitely seen it as well. The sizes of the burritos, the overall sentiment around Chipotle has kind of dropped. I haven't been there as much lately as well. So I think there's some headwinds for Chipotle just because of it. I would say in my area at least, they hired a bunch of high schoolers to work there, and they've kind of messed things up quite a bit. So that's my take. I don't think Chipotle is necessarily going to do too great. Let's go over Max's analysis, and then I'll pull up our charts.
So Chipotle, we have a Q2 2025 earnings snapshot. We have revenue coming in at $3.1 billion, expected 4.4% year over year. EPS, we're expecting a 32-cent forecast, which is down 5.9% year over year. For same store sales, we're trending flat to down again, 0.4% decline in Q1. Customer traffic is still declining, down 2.3% from last quarter. Food, beverage, and packaging costs are up 6.4% year over year, which is equating, by the way, for them around $930 million. Labor costs, the forecast is at $789 million, which is up 10.2%, and tariffs are expected to hit gross margins by 20 basis points this quarter. Translation, more revenue, but way less profit, and it's not just the cost of bland steak to blame, people. This isn't just about burritos, it's about consumer stress in the high income bracket more specifically. Now there are five pressure cookers behind Q2 for Chipotle. Number one, traffic's not just slowing, it's dropping. Q1 showed a 2.3% decline in in-store traffic. The same store sales dropped since 2020. That dip continued into April. If Q2 shows more of the same, it means pricing alone isn't enough anymore. People are just staying home or hitting cheaper options like Taco Bell. Tariffs are also on the table here. The White House's new 10% blanket import duties and aluminum tariffs are already hitting costs. Chipotle sources nearly half its avocados outside Mexico, which are now more expensive to import. We also have inflation's not done with food or wages. Food and packaged costs are up 6.4% year over year. Labor's up 10%, and they're projecting flat restaurant level margin year over year. That means zero leverage. Any revenue miss will flow straight to earnings. Not great when EPS is already expected to fall nearly 6%. Seasonality just got weirder. Usually Q2 kicks off burrito season, big volume from Easter to Memorial Day, but in 2025, a late Easter and colder spring pushed the seasonal demand into Q3. If you were hoping Q2 would be the rebound after Q1's whiff, this shift makes it harder. Weak numbers now could spook markets even if the burrito boom is just postponed temporarily. Now Chipotle, it trades like an AI growth stock, not a restaurant chain with flat traffic. Its PEG ratio is 2.68, more than double the industry average. That works when comps are hot, but right now, valuation is priced for perfection, and burrito perfection is looking harder to serve at this point. Now, what are some strategic offsets they have? Digital sales. They're now 35.1% of their revenue. The app, loyalty program, and delivery partnerships continue to support average check size and repeat visits. Chipotlanes. 1,068 stores with drive-through pickup. These formats are faster. Cultivate Next Fund. Investing in plant-based innovation to diversify the menu and win over Gen Z, aka the avocado army. Mexico expansion. first international push in years in partnership with ALSEA. High risk, but long-term upside here. And then also buybacks. $1 billion still left in the 2025 authorization. Could support the stock post-earnings as well. Now let's talk about the bear case here. The tariffs plus inflation are killing margins. Tariff declines equals structural demand issue, and flat guidance could break momentum. The stock trades at a 45x earnings, so there's absolutely no room for error with Chipotle either. Now, Chipotle has earned its premium, but now it has to defend it. The quarter is a litmus test. Can Chipotle pass the cost inflation, calm the tariff fears, and convince investors the burrito bowl isn't broken? If they beat and raise, the stock probably rise higher, but a revenue miss or weak traffic guide could send shockwaves through the broader consumer space. Watch closely. This isn't about the food. It's about whether the post-COVID consumer is finally out of gas or if that consumer sentiment is truly as bad as we are expecting it to be. And yes, Dark Silver, there is a burrito season.
All right, let's go look over at the chart. We've got this big old looking flag going on. You got to keep in mind too, the thing about Chipotle that I want to point out is that it had a split quite recently that took it from over $1,000 down to 50 or so. So I think they did a 20 to 1 split back over here. Yeah, or 50 to 1 split. Oh my God, yeah. So it was trading extremely high. It's still at near all-time highs in a sense. But you got to keep in mind, take this number and multiply it by 50. So over 2,500. It was almost a $3,500 stock. So at this point, it's kind of in the middle of this little bull flag, you might imagine. The thing is, though, volume does, if I peek over here, volume, they are buying near the lower ends of it. So it's very possible we could still see this come back toward under 50 or a little bit underneath it is at least where I would put it. So if I were to give you guys, just so you guys are also aware, on this volume profile, you'll see this orange line. This orange line is called the POC, or the point of control. That is where you will see the most amount of volume for at least what we're looking at in terms of what's on the screen. So if I go ahead and I scoot it over, you'll see it scoot down over here, which shows that the biggest amount of volume is down over at that $41 range. Now, like I said, if we do see it drop, I could see it drop down toward about what, 49, 48, $48 I would probably say is one of the nice round numbers that you could see over here. If we do see a pop, we do have a bit of resistance at that $54 range. Previous highs that we've seen, 55.70. PE ratio 47.39. I think that right now with what Max has to say is they do have some more headwinds than tailwinds as what we can see here. So Chipotle probably going to be leaning a little bit more on the bearish side. Now let's take a look at what Stacks has to say.
I was going to say, to give you perspective, I have Chipotle calls, or Chipotle puts for $7.25. I have $52 puts, and those bad boys peaked at $2.02 today, and our entry was about $1.54.
Yep, we do have, I would just say, if you look at the short-term positions on this, 8.15, 7.25, these ones are very, very likely going to be your earnings plays here. Definitely aiming toward the lower end of it. Total combined over, what, 700, almost 800K. You do have this from back in on the 7th, so, over 2 weeks ago. And these guys are down at this point. So just keep in mind, too, we don't see too much equity buying either. A little bit at the beginning of the month, but nothing major. Just, 84 mil in terms of Chipotle, which is very small in terms of what their market cap happens to be.
Mm-hmm.
All right. We should start to see some reports coming out. EQT is just frozen. NPH is up, but
let's fucking go.
ENPH, I had a position on this one up as well. EQT still waiting for it to fully report, but it popped a little bit and it's just sitting there. So I don't know about EQT so far. But yeah, Enphase. What other ones do we have in terms of today's report?
Ooh, U.S. natural gas output could decline after hitting record high in Q2.
Yeah, we saw that. That was yesterday. That's why we saw EQT drop yesterday. That
Oh
was a
no,
big.
I'm just saying that came out on Reuters 4 minutes ago.
Okay. Yeah, we saw a big drop in EQT yesterday. That's where I snatched up some of those calls because I liked where it's at that resistance at this point. We'll see.
Yeah, no,
It
that
should.
was my. I'm just reading. I'm going through and like on TradingView how it has
Yeah.
that little like.
Yeah, I see it too. I see the.
So Reuters either just because Reuters also came out with an article yesterday. Nat gas companies fall on record output, lower demand forecast, and then 4 minutes ago they just put out another one about Q2 forecast specifically.
Yeah, we'll see how that one moves in a little bit. Let's get back to some earnings. We'll come back and revisit that as soon as it starts to actually move. Was it? We do
IBM's
have.
another one.
Yeah, IBM.
By the way, IBM might be one of my favorite picks of earnings season this year. And quantum computing, 2 words. Those are the only words you need to care about right now when it comes to the future of AI. Speaking of IBM, we got some numbers to look at. We got EPS coming in at $2.38 expected, which is 10% year over year. Revenue at 16.7 billion, 4.5% year over year. Free cash flow is looking at 3.3 billion. AI and consulting revenue, key segments to watch. Think of IBM as the Dow of AI, basically. Like, no one thinks the Dow's sexy. Your grandpa invests in it. And unless you're over the age of 50, you don't understand the relevance of IBM in the computing space world. However, I'm a nerd with no friends, so I do. The reason why IBM's significant is these $25,000 computers and laptops that they were producing. It wasn't to sell to me and you, it was to sell to other organizations so they can come out, make them sexier, make them sleeker, make them consumer friendly. And that is IBM's idea, is they create the things that traditional computer companies, Dell, HP, etc., are afraid to make because they're not willing to risk the market share. IBM, however, they have the legacy customers, they have the free cash flow, they have the R&D, so they're going to go ahead and do that stuff. Another thing, Red Hat hybrid cloud. It's in focus because they made that acquisition about a year ago. Again, our 12 to 18th month rule, Red Hat should start showing some type of return. Risk here is margins under pressure from consulting softness because they're probably going under on their consulting fees to drive more volume versus getting pounded out on competitiveness. And Zach's rank is giving it a number 3, which is a hold, meaning if you had bought in a while ago, just hold on to it. Don't worry about it. Now, what's driving this quarter? Quantum computing, like I said, from sci-fi to balance sheet, sort of. IBM is leaning hard into quantum. It's pitching itself as the first mover with plans to build a fault-tolerant quantum computer by 2030, a machine so powerful it makes today's supercomputers look like microwave clocks. Now, why does this matter? Governments are spending billions on quantum. Think of China, EU, and US. Potential national security plus pharma plus energy implication, and IBM is one of the few companies with a commercial system already in the market, as I mentioned earlier. But let's be clear, this is still early stage. For now, it's more narrative fuel than actual revenue. Now, we also have the Red Hat and hybrid cloud acceleration. IBM's $34 billion, mind you, they spent $34 billion on Red Hat. Their deal was supposed to make them a cloud power. For a while, it underwhelmed, but now it's back in the spotlight with hybrid cloud and automation offerings that feel tailor-made for an AI era. Remember, everything's AI focused, so anything that is going to benefit the AI consumer, the AI contract, that is going to be bullish for that company. Now, they also have AI consulting and agnetic workflows. IBM isn't just building software, it's selling strategy. But consulting is low margin and highly cyclical. If clients are pulling back amid macro fears, this segment will show first. So be on the lookout for that, because this is probably one of the first things they'll bring up on their call. They also have free cash flow. It's the dividend lifeline. Let's not forget, they still pay a juicy dividend of 4%, and it kicks off over $12 billion in annual FCF. That's boomer stock future. But it's also why the company is getting institutional love again. Defensive appeal in volatile markets, supports buybacks and dividend hikes, and it helps justify elevated valuation compared to its historical average. Now, the 5 burning questions: is AI spend growing? What's the monetization plan for Quantum in the next 2 years? Are consulting deals slowing due to trade/tariff uncertainty? How sticky is Red Hat's hybrid cloud business? And does IBM raise full year FCF guidance again? Now, their bull case, aka the poop zone, Quantum is still 5+ years from a real revenue being out there. Again, look at AI, look at predictive analytics. Consulting slowdown, that's a margin headwind. Tariff trade and worries could delay enterprise spend, by the way. Think EU, China. And valuation getting stretched for a low single-digit grower. So that's why I gave it the $300 price target. I figured it wasn't, I think when I called that, it was at $212 a share. So for me, I was just like, I don't see this thing moving more than like 80, 90 bucks within a year. So that's kind of the deal that we got going on with IBM. It's not sexy, it's not exciting, but I promise you, like Verizon, it pays nice, fat, juicy dividends, and watch the whole camera that it throws out once it finally gets out that quantum computer to not only the general public, but its enterprise customers as well.
Very good. I like that. You can see it's kind of been in this upward channel since back in April, when we had the tariff tantrums. It's up almost 100% from that low, right? So if you got in down there, man, 80, almost 90% to the highs. Like Max said, aiming for that $300 range. PE ratio 49, so fairly high, but again, this is one of those growth names aiming for the future, especially with what he had to say with quantum computing. We did have this channel that it peaked up above, came back down, and then it went up a bit higher. I would say we're going to probably retest this line probably tomorrow or so. And if earnings are going to be a beat, you can see they generally do beat earnings. They have a few misses every now and then, but I could definitely see this heading back up to retest those all-time highs. If we do see a miss in some sort, then definitely come back into this channel. We do have some resistance at about 269 and 263 would probably be my first targets on the downside. Now, if we take a look and a peek over at our stacks, and take a look at IBM, not too much activity. So the last time that something was actually done for IBM was back on the 16th, so last week. We do have some buying on the 7th earlier in the month. You know, millions and millions, hundreds of millions of dollars being spent. So that could be them positioning them, expecting the long term and the long run in terms of what to expect in IBM.
I will say IBM, you're not going to see a ton of options buying. You will see more share buying, and you will see more and if you do see options buying, it's going to be more long term. Again, we're talking about our parents, guys. This is a stock that your mom and dad are currently buying and are excited about. Like how we get excited about GameStop, IBM is their GameStop to a degree. So it's definitely a stock where you're not going to see a ton of options activity. And again, as myself and Eric always mention, this is where it's important to have that thesis. If you have that thesis in place, you can't lose, theoretically. But again, you got to have that thesis in place, be good to go. IBM is definitely more of a share-heavy type of company, so look into the dark pools, look for volume shelves. That's what we're looking for when it comes to a company like IBM.
Yep. ENPH dropped a little bit. They look like they had a revenue beat and a EPS beat.
It's probably guidance, to be honest.
Yeah, we'll have to see. There's something here about an 8K filing. Enphase Energy files 8K operations and financial condition. I'll have you take a look into that later. EQT, on the other hand, it's hard to tell right now. I think this is one of those names that doesn't exactly trade too well after hours, but is up after hours just to 54.73. So we'll keep an eye on those as we go. It looks like it was a beat on revenue. I had it on Twitter for a moment. A beat on revenue, but no, revenue was missed by 0.44%, but EPS was a beat by 14%. So it could be the natural gas news that just came out that might be suppressing it a little bit. Okay, what other names do we got to go over for Wednesday?
I mean, what's nice is this means we could see a nice drawback, because the big thing that you guys need to know about these earnings reports is we're looking, the market, the street, the stocks, everybody, they're looking at this kickoff to earnings season as the first time tariffs have really affected anybody. So just be understanding that, like, we may see drawbacks, we may see some drop-offs, but these are optimal buying opportunities because companies have already kind of like ripped the Band-Aid off in a sense of giving the worst case scenario. Now, if companies pull guidance, that's a huge red flag and expect a significantly more downside, because that's them saying, we didn't expect for this big of a drawback, so we're going to need to reposition ourselves. So why are we going to give out guidance when we don't even know what that could be? So again, these after calls, these results are going to be so much more important than they have been in the past, because we've been in a 20-year high for the most part, but in terms of earnings, we've never had this type of trade war going on during a peak of earnings season like we did this time last year, for example.
Yep, agreed. The whole situation with the tariffs is starting to finally hit the balance sheets on a lot of these names, and you can definitely expect that that's going to be the headwind that kind of suppresses certain names.
100%.
One of the other names that we saw, QS QuantumScape, they've got a state-of-the-art battery that apparently can hold better charges. So far, we've seen it pop since earlier last week. Last month. Last month it started to pop from down in $4 or so. We already saw a run up as well. Kind of popped up above where the wedge or where the trend line is, came back down, tested the lower end of it. We're at the top end of it as well. So do we see a sell-off? I would expect that unless they have some sort of major news where their guidance shows a major beat on their earnings coming up tomorrow, I would actually say the risk here is really to the downside. You've had such a run-up, such a quick run-up, that it's possible that somebody got news early on about this name and pushed the price up, got the short sellers out, and now they might have repositioned themselves for higher up. So you're going to see some more significant resistance at these upper levels.
By the way, I'll just go over the bear case real quick. I did a QuantumScape earnings preview as well for all you people out there. The biggest issue with QuantumScape, no real revenue. The valuation for this company has been stretched out so far. And I don't know if you guys remember this, but I told you early on, I was like, be aware of companies who are just throwing out fart into the wind and hoping people buy it, because a lot of this doesn't have any real revenue driving capabilities behind these initiatives and features that these companies announce. If you go and look at predictive analytics, that's what end up happening. A lot of those companies got bought out for their IP versus what they actually produced. QuantumScape, no real revenue. Tech remains years away from monetization, by the way, with them. Margins, what margins? Like, if you can't sell anything that people can buy, then there's no margins that you can set against. Any guidance slippage, that's going to be a rug pull. An analyst price target is still down 50% below its current level. So those are all things you need to be aware of when looking at QuantumScape or any of these AI quantum type companies coming out in the future. A lot of these may be acqui-hires for the big guys, Google, Dell, NVIDIA. Like, yeah, they'll pump then, but you are gonna get brutalized if you're just buying in and hoping for the best. You need to wait for actual news with companies like this, because at this point you're getting catfished. That's like the best way to put it. You're hoping it's a hot girl, but it could be a 50-yard fake out once you start to walk up a little closer and realize, what do they have hiding under the engine? So the bear case, the fact that no real revenue was their biggest flag, that's a huge red flag for me when it goes into earnings. That's a Lululemon short type opportunity for me going into earnings.
Yep. You guys will also see like another example of all of this is this huge run up with Open, right? Open is a company that doesn't make any money at this point. However, it doesn't mean that the stock price can't run up. There's, if you guys are familiar with short squeezes, you've seen what happened with GameStop, saw what happened with AMC Theaters. The thing is that when there's a lot of downward suppression and a lot of downward pressure on a stock name, the moment that pressure is relieved or a lot of them are forced to get out, it creates buying pressure and can shoot a stock price up very quickly. And that very likely may have happened with QuantumScape just a few weeks ago, and as well as Open. And so understand too, one of the things to keep in mind is to keep an eye on that IV. For example, right now, if you're just peeking over at the stacks for QuantumScape, go over and scroll over to the right on IV. IV, we got 134, 236, 226%, 248%. So high IV very likely means that price could go in their favor and go in their direction, but if people start leaving the room in terms of these specific strikes and their expirations, they leave the room in terms of those options, you can still see that that premium go down. So earnings, you have to understand, IV crush is something, it's every single trader that has traded earnings has probably experienced it at this point. But understand that and how it affects you and affects those premiums is something for you to make sure that you understand. QS, in terms of today, we saw a buy of some calls for the end of the week. So $15, I'd say that's a decent bet. 54K, I mean, again, if they've got $1 million portfolios or more, that's fairly tiny in terms of what they're willing to spend on it. So if I just filter for the buys, you'll see where all the buying pressure came over the course of the last few weeks. This would have been your signal that they're expecting it to run up. So it ran up from about $4 or so all the way up to almost 15, so $13 to $14. And as of right now, I would probably say the risk is definitely more so to the downside. You got this unusual $300 bet or $300,000 bet to the downside, down below $11. So I do think that QS may see a downward, a bit of a drawback when it comes down to after they report earnings, unless they have some major news to share.
Oh wow.
So
ENPH 6%.
Yep, down. Let's see what else.
EQT up point is basically flat. I think they just burned both sides of the premium on EQT.
EQT doesn't look like it's moving very much, period.
Oh no, I'm saying like if people bought like at end of day versus like buying calls at open.
Yeah, we'll see
see how it plays
out tomorrow. Can't really tell till open.
Well, not only that, but we can't really tell we see until we see what happens on their
The earnings call.
conference call.
Yeah.
Yeah, because
Yeah.
that's where. And one thing to note, guys, is like we may have all of these catalysts where it's like, oh, this thing might drop this sector or whatever. These companies have investors and a board of directors. At the end of the day, you think these people are interested in losing 10, $20 million a quarter for the next 3 years while they figure something out? No. So what can happen on these calls is we see something like with EQT where it hasn't moved much, but once we get on that conference call, depending on what their board says, what their CEO says, what their CFO says, what these various people are going to say, that'll give us a little more clarity into the direction we can expect with stocks like this at the end of the day. Because really what it's boiling down to is understanding like, and that's why I'm saying, and myself and Eric say, like, the thesis matters. Because if you don't have a thesis, then you don't know what to look out for on the conference call, for example, or you don't know what to look out for in the news. So you need to have that thesis down, packed, and tight, because that makes you searching for that catalyst to give you bullish or bearish confirmation so much easier, because then you're just looking for keywords at that point. And as we can already see here, that EQT conference call is probably kicking off, and we already got a nice little 1.6% pop off that last 5-minute candle. So that is a perfect example of like not just having that conviction, but having a little bit of an idea of why you're trading in the position you're getting into in the first place.
Yeah. EQT, like we said in our previous live stream, was the fact that they do have the higher natural gas prices going for them, even though I think yesterday was when we had the more negative news about it dropping. But again, that should be reflected upon this current earnings report, so we'll see. But again, if natural gas prices are dropping for the upcoming years or upcoming months at least, that could prove bad for their upcoming guidance. So it's, again, earnings can always be a coin flip. It's fun and great when we do make the money and we do call out the correct direction, but always keep in mind a lot of information is somewhat priced in beforehand, and you are trying to predict what could be the surprise. Keep in mind too, every single one of these companies being on the stock exchange, they're trying to make money for their companies. They're trying to make sure that they boost their stock price, because that increases their own net worth as well. So there's always a bit more of a bullish sentiment or tailwinds that help push a price up. And at the end of the day, you have a lot of people working to do that, but it is always going to be dependent upon how the reports are end up being taken and absorbed by the investors and by the public. For our, looks like we did most of our names for tomorrow, Wednesday.
I think I might have a couple more. Let me just go double check right now.
We could kind of look over. I know you have, EQT just popped over 5 or 55.
Yeah, I was gonna say EQT. I think their whatchamacallit went pretty well. Feel free, by the way, anyone in the chat, if you want some specific earnings reports for me to break down, just feel free to drop those. I'll make sure to write them up tonight.
Let's go over the charts for some stacks for these requests. We have Mara. I know I called out a Mara situation last week. It didn't pan out as well as we would have liked. The issue with it has to do with the fact that the short-term contract, right? We had a big drop after the big pops for Bitcoin. We can also take a look at Bitcoin to peek over as to what's going on. It's it's starting to break out of this wedge. It's still possible Mara could see itself come back, but I would make sure that you guys are aware of the risks that come with it, because we do have the 2250, so it means it needs to break up above that for us to be even close to break even. Add on top of what you're paying per share. So at the end of the day, Mara, it's lagging a little bit behind what Bitcoin's doing. So if you're already down 50, 60%, you might want to preserve those premiums and make sure you don't look back on it, because this still could pop by the end of the week, but you're holding on to a lot of risk holding it on till Friday. Another thing as well, and another way that I like to gauge sentiment for it, is to peek over at stacks to see if there's any sort of additional buying pressure. So for Mara this last week, we have a mix of calls and puts that have come in. We still do continue to have that $7, $25, $20, and $21. So they're aiming a little bit lower than before. These $22.50 again are a bit higher up than what we expected. And it's not moving in that direction, and so that's eaten away at quite a bit of that premium at this point. HIMS.
That's been an interesting one.
HIMS. Okay, so the first thing was the fact that Wegovy ended up cutting their contract with them, right? So that's the Ozempic maker. They cut the contract with HIMS, and that's what caused the initial drawdown on the name. As of now, the company is still poised and set up for decent growth and for a decent future, but you can see that big drop at the end, or about a month ago here, that was due to that news. Now we do have earnings coming up. What we have to keep in mind is, with that drop, is all of that, the missing revenue from that already priced in. Earnings doesn't come up for another 2 weeks or so we have some time. I would just say keep an eye out for what Max has to say. Make sure you guys subscribe to his Substack. If you guys are in our Stacks channels, you guys can always see what he posts during on his channel, which are going to involve a lot of these reviews. Their PE ratio is also very high, 73. Go ahead, Max.
I was going to say, by the way, if you guys ever have like tickers, so you have to understand, my main thing is I just go off of like what I'm seeing in flow. But if you guys have like specific tickers you want me to dig into, like, dude, I'll put the rubber gloves on and look 3-4 weeks back and like give you some sentiment on news plus options flow to say like, hey, I think this is what the narrative could be here. The goal is to give you guys as much context and understanding going into whatever bias you may have, but without my bias, with just straight facts and money and data, because a dude not wanting to lose $3.4 million is a real data point that you can use to leverage into a position you might think will play out. So please feel free, interact with me. Tag me in the Investor Central Club Discord. I don't care. Like, I sit on stream all day and hang out with you guys and give SPY level options and read out unusual options flow activity. If we can muster this down into things you guys want to see, then it makes it better for everybody at the end of the day. So please feel free to interact, ask me questions, how I look at things. Yeah, it's not always the most traditional sense, but like, it also works to a degree. So like, I don't think there's anything wrong with asking questions, because you can ask Eric. I talk his ear off about random shit all the time. So like, I will happily talk to you guys about whatever, whenever, anytime, because I'm here for you at the end of the day to make sure you feel comfortable, confident, and understand what do these option orders actually mean.
Yeah. If you're peeking back over here at HIMS, seems more bearish than anything to me at this point. You got the 6.3 mil, 3 mil of puts. We do have the Stacks AI call for $90 calls for March of next year. That's got quite a bit of time. But as of right now, that's probably, I'm guessing it's probably down at this point. Might have seen a little bit of a pop. But let me just show you guys. What I would do here is go double check on that specific print. Where's my week? There we go. So pick out HIMS. Let's go look at that March. They purchased for $90. So look over here. Let me make sure we're not covering it. Okay, so if you can see here, $90 calls, it is, their open interest is still there. 90 and 95, it's still there. So it's possible, they're very possible they're still in there. Maybe they've got some information we don't know. It's going to have to take some time for that one to play out because they've got 241 days for those to expire. And that's, if anything, and what I've seen with Stacks, and Stacks AI in particular, is the fact that when they do buy time, there's always a reason for it, okay? They're not purchasing, keep in mind, if you're a trader, you're trying to balance your risk to reward. That's the main thing. So by buying too much time, you're limiting your reward. You're limiting your risk as well. Keep in mind, so by buying all this extra time, they're limiting their risk because if it were to expire sooner and those $90 calls, they're very likely worth nothing at this point. So understand that they've balanced that. Now, if you're trying to maximize your returns on things, you don't buy far further out than you need to. And so that's one of the things that you need to keep in mind is when you see close expiration dates, really understand they're expecting that move soon. If they buy further out expiration dates, they might have some knowledge. I would expect, and this is something that we could look back on later, is it possible that HIMS has some sort of contract in the works at this point? That person knows it, and until that news happens to hit or the rumors start to hit, you know, very likely when it does hit, you can probably expect to see those contracts sell off and that open interest disappear there. So that is something that you have to just understand. Nobody has a crystal ball into the future, but if you're able to balance your risk to reward there, understand what Stacks is trying to say and interpret it to your, you know, to your advantage. What else people asked for? I know somebody asked for SLV, so let's look at FXI as well. SLV, silver. Max and I have talked about this before. Silver is a very slow mover, but if you take a look at the buys for silver, look at that, guys. What does that tell you? All green, all green, all green. Okay? Now, my thesis, I'm going to give you my thesis for it. I've been saying over and over, right now we're in this debt spiral. If you follow Ray Dalio, he's been talking about it. A lot of big nations have gone through this money printing cycle. And what ends up happening at near the end of that cycle is the fact that they end up in a debt spiral where they cannot maintain their national debt. In doing so, they have to continue to print. What does printing money do? Well, look back on what happened during the COVID shutdowns. We printed a lot of money, and look at what happened to asset prices. Look what happened to, you know, trading cards. Look at what happened to Rolexes and even used vehicles. It's going to inflate prices. Now, what is a hedge against that? A big hedge against it happens to be gold and silver. So one of the things you can also see is gold and silver both have moved pretty nicely, but they are slow movers, okay? So here's gold right here. Gold already back near all-time highs. Shoot, big cup and handle, motion up. SLV, same idea. We're getting closer and closer to that. I do believe this probably is a Stacks AI print that I put in here starting back in March. I'll look back on it in a moment. And you can see, yeah, dip down below, but now we're very likely well into profits at this point, and they're aiming for October above that $38 level. So silver, gold, silver, you know, there's different ways you could play this. You play the options, obviously that'll leverage your money in a different way. You could go to Costco, you could go buy the bars of gold and silver, go put it in your safety deposit box and come back to it 10 to 15 years later. You know, I hate to say I guarantee it, but at this point, I very likely guarantee the fact that your gold and silver is going to be worth more in the long run. That's just how money works in our system. And understand that those things, you know, it's going to appreciate in value simply because there's a limited supply of it. And at the end of the day, it's going to gain value because of the devaluation of our dollar. So if you look at DXY, the dollar continues to go down. I do expect it to break below that $96 at this point with where things are going.
I was gonna say silver. Anytime you see GLD and SLV calls start to come in, just know those are flights to safety. Anytime I highlight those within our midday options flow, end of day options flow recaps that you get every day if you're subscribed to Trades and Gains Substack, shameless plug. But yeah, I highlight all of that stuff as to why it could be happening. And 9 times out of 10, these rallies that we're seeing within the market right now, when we see GLD and SLV calls flow through while we're watching Spike absolutely just pump, just know those are, especially when we see golden sweeps more than anything, that is not, that means institutions aren't convicted. They don't have conviction behind the rally that's occurring. That means they think something could happen in the long run. It's showing that there's weakness behind the Federal Reserve. There's weakness behind rate cuts. There's weakness behind so much more. So just make sure that you're like paying attention at the end of the day, because as Eric said, those aren't plays where we're looking for a quick gain in 2 to 3 months. Those are plays where we're not looking until towards the expiration date for a gain, because most likely a rate didn't get cut. A CPI print didn't come through how we expected. A PCE print didn't come through how we expected. So those are all things that are not only worth paying attention to, but considering as well, and maybe taking a small position for yourself. And I would say, in terms of time, give yourself the most time with the best premium, where if you need to average down, you can. If you can take profit at 25, 30, 40%, you can, and still have some runners going into that expiration date. So it's all things that you just need to be aware and understanding of, because at the end of the day, those are going to be the biggest catalysts when it comes to investing in safe havens, whether that's gold, silver, Bitcoin, crypto. You just need to have that understanding of what your risk tolerance is and where those drawbacks could actually exist.
Yep, very well put. One of the other names you guys asked for, Boeing, because Chemo mentioned it. I just pulled up my chart. Guys, look at what I had drawn out. This yellow line is my prediction of where Boeing was going to go. We basically ran up along with it exactly how I had drawn. This is on the daily. Keep in mind, my expectation, my thesis for Boeing here is that we are going through an accumulation phase that I've drawn out for you guys from before. So very likely we could see it come back up further. We would very likely have to see a rejection in this area and a sign of strength slash consolidation in these upper ranges. So I would expect in that $256 range to have a bit of consolidation. Probably could happen below it, could happen above it. It's hard to tell at this point. But Boeing is one of those companies that, you know, has the government backing to it, so ultimately it should and it will continue to grow over time. It's had a lot of bad and negative news, especially with issues with their airplanes and things like that. But you know, I would say right now we might see a little bit of a pullback. Very likely we will see that pullback being bought up. Keep an eye out for large volume coming in, and you very likely will see and start to hear positive news about Boeing as it pushes it up further, you know, back toward those $300 levels. So that's exactly what I expect here. There is a risk it could come back down toward these lower levels and back to this trend line, but this recent push up seems to be pretty strong. Could be a sign of strength that we will see very soon. What else? I see 15 of you guys are still watching. Give me an ICC or a Stacks so I know you guys are still here. If you were in any of the positions that we've shouted out or any of the reviews that we've done, let us know. We will be back at this tomorrow for another closing bell, our usual Wednesday closing bell. We will go over the upcoming earnings for Thursday, and also monitor what's going on in terms of Wednesday. So Tesla, Google, ServiceNow, IBM, those things. We're going to try to make sure we go over and let you guys see what's going on, as you know, in real time, as the closing bell expires.
Be right back.
Yeah. EQT as of right now looking like it had a little bit of a pop. It's one of those, like I said, very likely, very extremely low volume. We'll have to see what happens tomorrow. As of right now, my Robinhood is predicting that it's probably going to give us some slight returns. We might want to make sure we ride that IV, especially as as it goes. So we'll have to keep an eye on it as we close out tomorrow, or as we go into open tomorrow. There's a possibility, especially because we have the headwinds of lower natural gas prices, which are going to cut into their future revenue. We might want to make sure we sell those pops, sell the news as we may. Quick update to our Wolf position and NU. I know some of you guys were following. I haven't given too much of an update just because we've really just held on with them. Wolf and NU. Wolf is looking at profits at this point. They're kind of back and forth. Every time we see a pop, we're seeing around 40%, dropping down to probably around, let me make sure, on the wrong page. Okay, Wolf, we did see additional calls come in as well, so we're still holding on with this. I'm still expecting it to break this upper level of 564. We're just waiting on with it, and my profit with this continues to fluctuate between, I'd say, about 15% up through about 45 to 50%. For those of you that are doing a small account challenge, that's where that's at. In terms of NU, I was very close to cutting, but I'm still sticking strong with my thesis, which is that it's going through a distribution phase, just like you guys saw with Tesla as well. You see these little wedges and these this consolidation. I'm expecting to see that we're going to start heading further down from here, and that's also, as you can see, when we did hit right around 14, we rejected off of it very hard multiple times. This position is down 60% at this point. It was a smaller position, obviously, with our 1K challenge. There may be a possibility as we come back down further to these ranges that we might consider just getting out and saving ourselves a little bit. But we're going to have to see, because our expiration is for September 15th, which is coming up. And we want to make sure that we're careful with that situation. When Eric calls those October print spot December, still have them plus 175. Yeah, I mean, let me know, guys. I understand that, some people just lurk, some people are just behind the scenes. What's worked for you, and also, how much is this helping you guys? We've been doing a lot more live streams, but really just trying to share our thoughts. When Max and I started this out, our goal was just to have a conversation. Max is great with the numbers, looking through the data, looking through the analysis of things. I've also, with ICC, I've taught the Investor Central Academy course where we go over charting, we go over Wyckoff accumulation and distribution, we go through Elliott waves, ICT a little bit, we go through the strat. There's a lot of different trading strategies that once you figure out what works for you can be very, very beneficial and very, very profitable in the long run. But I do know a lot of you that are newer are just following along the Stacks Prints, Stacks AI. Again, I do all of the back testing for Stacks AI. There are great numbers behind them. Everything's transparent for you guys to see. But, if you are trading those and you understand it, it is very often going to come down to the trading psychology of greed and fear. So understand that. It's very likely some people that got into my NU position got fearful when it popped up to those upper ranges. I always said when it closes above 14 is where I was going to get out. We never fully closed above 14, so that's why we're still in those positions. And if you guys were here since the beginning of this stream, this, again, you can compare this to the Tesla chart that we just showed. That's why we're a bit bearish on the Tesla chart. But again, we will have to see tomorrow. We will have to see how the earnings report comes out to be. That's why, again, during our earnings streams, that's what we're here to do. Going to show you guys what our predictions are, what our analysis is, and then we're going to see it in live in real time. The goal here is to get you guys to understand how powerful of a tool Stacks is, and when you do have technical analysis and your charts drawn out, how useful that can be in helping you gauge the correct direction. But remember, it is a game of probability. It is a game of making sure that you manage your psychology and your risk. So understand that's where we're at. I don't have anything else for today. We want to make sure you guys understand. Come join us tomorrow. We will go over some of these other names over here. Let me scoot our face over to the other side. We've got American Airlines.
I got that one done if you want me to go over it.
I'd say let's just save it for tomorrow.
Okay, I was gonna say
anyway, right? American Airlines, Blackstone Group. We've got Southwest. We have Keurig, Dr. Pepper, maybe even Honeywell. We've got Intel, which is a big one that we should probably keep an eye on. Newmount. Those are the only ones I really notice here. CNC I see a lot in our flow, but I don't know if we necessarily need to go over it. And then this SAIA is the, I think they do the hummus dip, because I see their trucks around here in San Diego all the time.
Yeah, if you guys, by the way, anyone has like options previews they want for tomorrow, leave them in the comments. Let me know. Like I said, I have 15 done of the notables from earnings whispers. We have 112 companies reporting. If there is anything notable to report, trust me, I will find it, because I always do. If it's one thing I will do is outwork your favorite analyst. So feel free, drop tickers, drop suggestions, whatever you need, and I will get it done for you before that earnings report hits, so you can potentially take a position. So yeah, keep those posted, because I love doing them. I'm probably going to be on stream a little later tonight after this, just hanging out, doing earnings reports, vibing out to some 80s music. So come hang out, talk some poo, and let's make some money this week.
Do me a favor too, you guys. This is us aura farming, but at the bottom, give us that thumbs up. I just like to see that. You know, we do a lot of these streams. We spend hours on here with you guys. Give us that like. Thank you to the one person who's already done it as well. But it's just our way. We're trying to beat the algo. We're trying to make sure that people that want to see us are able to see us, and that's your way of helping us out, giving us that thumbs up, giving us a comment, that like, also being and participating in our discussion as well. So those of you that have the top fan, you know, number 1, number 2, those guys, we appreciate you guys coming in and joining us, hanging out with us, get an idea of what we have to say. We appreciate your viewership, because it does mean quite a bit to us. Another thing as well, we do have some big news coming soon. Stay tuned with that. Stacks and our team is working hard not only to give you guys new tools, but to help you guys understand things. So, you know, stay tuned with that. And another thing with you guys may have noticed as well in the Discord channels, you guys now do have access to my eRoo Trades channel under ICC Traders. So you guys can see everything that I post along with Max. We're the ones here to help you guys out and to try to give you guys as much information and content as possible. So thank you guys for being here. Thank you guys for your time. We will be back at this tomorrow. I will see if we have, we'll try to get to it probably around noon is what I'm trying to say. So 12 o'clock Pacific time for you guys. So we have a little bit more time to go over what's before the close. But what we're trying to do, like for example, today's Tuesday, we're doing our Wednesday close earnings reports now, so that you guys have at least a day to digest it, go over it, so those people that are missing out on it tomorrow won't miss out on anything. Tomorrow we'll go over the Thursday and the Friday earnings, and we'll see about the weekend, and we might even do an extra one on the weekend to get you guys ready for next week, because we got some even bigger names coming up soon. So yeah, with that being said, you got anything else, Max?
No, that'll do it. See you guys tomorrow. We're back on stream from market open to market close. So if you want to come through, get some SPY levels, see some unusual options orders, come and hang out, because I'm going to be there I think we'll kick it off around 9:15 a.m. We'll probably close it down around 3:30, 4 o'clock p.m. tomorrow. We'll be on all day tomorrow, though, just hanging out, listening to you guys. eRoo might pop in. Who knows? He always will randomly pop into the streams. So yeah, keep me posted, keep me roasted, and let's have some fun tomorrow, because these streams, by the way, are a blast, and we're like blowing up on Twitch because of it. So let's keep it running like our name is Usain Bolt. All right.
Love it. Thank you again, Max. Don't just hit the heart buttons over there. Hit the thumbs up underneath our name under Investor Central Club. That way it actually plays with the algo a little bit and helps us out there. But with that being said, we'll see you guys at the next one. Happy trading, as always, from Stacks ICC. We'll catch you later.